Good morning, everybody, and welcome to Morning Markets on Wednesday, the 1st of November. Today, I just wanted to focus in on some of the discussion from yesterday that Matt had on the Bank of Japan, but also look forward to the Federal Reserve meeting this afternoon. So just building on those comments from Matt yesterday morning, the Japanese yen was really the main impact that we saw from the change to the yield curve control policy in Japan, and the yen weakening back to the 150 level against the dollar. That's the level where we've seen the Ministry of Finance intervene in the past, and indeed this morning we heard from the Ministry of Finance saying that they stood ready to intervene in the currency market as required. So certainly something that we and the team will continue to watch over the coming days in terms of the direction of the yen, but also in terms of the intervention that does come. Just looking ahead to today, it's not often that you'll hear me say that when the Federal Reserve are meeting that there might be another announcement that the market will focus in on as well. And that comes from the US Treasury today. And why is that important for asset markets? It's very much because the Treasury on Monday announced the funding requirements for the US government through to the end of the year, some $776 billion worth of bonds and bills to be sold to finance the US government over the next quarter. What we're really looking for, and why is this important, comes back to what happened in July when we had a similar announcement, but also the detail of the tenors of that funding, so the maturity profile of it. We get that detail today, and that will be crucial for the bond market. Really, that announcement in July what has been causing and has continued to cause the material volatility that we've seen in bond markets, both in the US, but also how that has fed into global bond markets as well. And to give you an indication of how that has played through just over the last month, if we look at the US 10-year Treasury bond, at the beginning of the month, it was around 4.57% in terms of its yield. The end of the month, just yesterday, 4.9%. So quite a significant move there in terms of the US Treasury market over the course of the month of October. And that volatility has fed into other asset markets as well. And certainly that's why when we look at how asset markets performed through the month of October, weaker bond markets, but also weaker equity markets, presenting that challenging backdrop. I'll leave it there for today, but please do join us again tomorrow. Many thanks.